In this video, I want to give you a 3-month update on how this investing challenge is going, why I chose an index fund over individual stocks, and how investing at our current rate over time could potentially grow to $4 million by retirement. Honestly, the results of this challenge so far have been way better than I expected. Let me show you. This challenge officially started on March 2nd with 2 very simple rules. Invest a base amount every trading day, we are doing $100, and double it when the market closes down that day. So in the 3 months that we've been doing this challenge, 29 out of these 63 trading days have been down days, and that's just about half of the time. What I love most about this strategy is it completely removes emotion. Most people only want to invest when the market's going up, but historically, some of the best buying opportunities happen when the market is red and people are nervous. In this challenge, some of our best days have had double-digit returns when we invested when the market was down. Now, the coolest part is seeing how quickly consistency compounds. Vanguard's Total Stock Market ETF, VTI, is an index fund that we are using as it holds over 3,900 companies in the US stock market, and historically, it has honestly performed really well overall. So when we started, VTI was around $339.09. And as of the last trading day in May, it is trading at $372.54. Now that's an 8.98% gain since the start of this challenge 3 months ago. Now here's the cool part. Since we have been buying each small dip 29 times out of 63 trading days, we have made 9.33%. That's 0.35% better in just 1/4 of a year. Now, that may not sound like a lot, but over the course of this challenge, we'll see how that difference expands. So hit the subscribe button down below if you want to follow along and see how it goes. Now, I will say this, when you invest day to day, it can be very chaotic. Some days we invest and the market drops the next 7 trading days. For example, March 4th, VTI closed at $338.19 per share, only to drop the next 7 trading days to March 13th at $326.13. That's a 3.5% drop in just a single week. Then it continued to drop for 2 weeks to March 30th, where it bottomed out at $311.68. That's an almost 10% drop in 1 month. So here's the crazy thing. Since we doubled down each day, by April 13th, VTI had bounced back to $338.67. Mind you, this is still below where we started at $339.09. But we had already earned $167.48 in profit, or 3.49%. Now, fast forward 3 months, we have invested $9,185.25, and our total value in this challenge so far is $10,042.56 for a gain of $857.31, or 9.33%. Now, I'm not doing this challenge to try and retire in 5 years. It's about demonstrating how habits are what creates wealth. Most people think investing is about buying the next Apple or Nvidia, but historically, consistency has beaten emotion over and over again. Only about 10% of large cap funds can even beat the S&P 500, so just buying that one fund beats over 80 to 90% of traders. Warren Buffett once won a 10-year-long bet that he could outperform hedge fund managers with a simple S&P 500 index fund. Pretty crazy. Now let's talk about why I chose VTI specifically, because I could have picked Nvidia, Alphabet or Google, Tesla, Apple, Amazon, Microsoft, Meta, or some speculative investment like Bitcoin, which is down over 25% in the last 6 months, or Ethereum, which is down over 30%. And did you notice that out of all those companies in crypto that I named, which are the top 7 companies in the entire world and the top 2 crypto investments, only 2 beat the 6-month return of VTI, Nvidia and Alphabet. Now, some of those have even lost market cap in the last 6 months. That is why I chose a total market index fund. VTI gives exposure to basically the entire US stock market. So instead of betting on one single company, I'm investing in thousands of companies all at once, large, mid-size, and small companies. Even Vanguard's small cap index fund, it's called VB, has had a strong return in the last 6 months, showing that small companies are doing very well right now. So instead of trying to predict the future, I'm basically just betting on the long-term growth of the US economy itself. And historically, that is a pretty strong bet. And in all honesty, I'm a business owner with a wife and going on 3 kids. And like most people, I don't have time to analyze earnings reports, study valuations, or constantly everything going on in the market in the world right now. But investing consistently in 2 broad index funds, that's something almost anyone can do. Now here's where it gets really exciting. At our current pace, we're averaging around $150 per trading day, or $3,000 per month. And let's assume an average annual return, that's per year, of 8%. By age 65, that could potentially grow into over $4 million. And as of right now, that should be plenty to take care of my wife and I in retirement. And if you have been watching our budget series, this isn't all that we're saving. We have plenty to go on vacations, go out to eat, and enjoy life with the kids as they grow up. These investments are just enough to ensure that we have a nice retirement later while we're still enjoying life right now when our kids are young. And that is the power of compound interest. Let it do all the heavy lifting while we consistently invest. And this is why I'm documenting this challenge publicly. I want people to actually see what long-term investing looks like in real time. And if you want to see how this challenge unfolds over time, subscribe to the channel to see how consistently buying the dip compares to just buying an index fund each month. And if you want help getting your finances organized so you can invest more yourself, you can book a one-on-one call at the link down below in the description. For our YouTube audience, we can use the coupon code SHIELDLINE to get 50% off. And I'll see you in the next video.